All right, let's come to the big question of what we've seen in the month of June. We are once bitten, several times shy. So we're not going to be the first to say the worst is over, the economy is going to bounce back, we're on the fast track to recovery. We're not saying we're seeing a V-shaped recovery. No, we're not making any of those mistakes that perhaps looked very different after the first wave. The second wave, though, and let's go by the data, has receded for now. There's no doubt about that. We are seeing daily infections at a 50-day low, and we are seeing restrictions lift in many parts of the country. Of course, these are being done in a guarded fashion, but restrictions are being lifted. What we're seeing as a result is mobility going up rapidly, and there's data to back this up. Google and Apple mobility is showing that people are moving around more freely. Shops, establishments, businesses are open, though in restricted ways, and it differs from state to state. Other parameters, high frequency and ultra high frequency indicators, are also showing a resumption in activity. When markets are open, there are enough people there to go out and buy things. That immediate demand is coming back. The question is, what are the tea leaves saying? Was the month of June truly a turning point, and can we hope for a sustained recovery? Of course, all of this comes with a big if. We don't know if there's going to be a third wave. Will vaccinations catch up pace? The other big factor, of course, is that vaccinations received a big boost in the last 9 days of June after a new government policy has made it free for everyone above the age of 18. So let's take a look at what's happening, and let's talk to the people who are tracking this very carefully. I'm joined now by D.K Joshi, Chief Economist at CRISIL, Kaushik Das, Chief Economist India at Deutsche Bank Research. I'm speaking today with B. Thiagarajan, Chairman CI Western Region and MD Blue Star, and we'll also be speaking in a while from now with R.S Sodhi, Managing Director at Amul India. Welcome to all of you, and thank you so much for joining us today. Mr. Thiagarajan, let me start by getting your take. Manufacturers are facing a double quandary. You're waiting for demand to come back, perhaps, and also dealing with high input prices and having to pass them on to some extent. How have you seen the month of June? Do you think it's a turning point?
Good evening, Tamanna. You summed it up very well. It is indeed the demand coming back. There is still a doubt as to whether the recovery will be same as last year or it is going to slow down. That is one subject. The second is very unprecedented increase in commodity prices. Most of our members in CII, and if I were to talk about the consumer durable manufacturers or automobile manufacturers, we are compelled to increase the prices, which will slow down the demand, or if the demand will shift to lower end products. So indeed, we are facing that headwind. But having said that, there are 2-3 positives. Number one is, as you rightly stated, the real sentiment will come back if the vaccination numbers are going to be. I believe that the economic recovery is directly proportional to the vaccination penetration. That is number one. Number two is, as you had seen, even today government had made certain announcements, and there was an announcement on 28th of June. So therefore, the government is doing its bit to revive the economy. The third one is actually there was a pent-up demand. We witnessed in June there was a significant amount of sales growth, but I'm not very sure whether it is going to be sustained going forward, because as the inventories dry up, people will end up increasing the prices. So on the whole, it is not that bad. That is my assessment, but it is not going to be a sharp recovery as we witnessed last year.
Yeah. You know, I had the opportunity to speak with Mahesh Vyas last evening, and he made that point as well, that we're not going to see a bounce back because remember, consumer sentiment has also been hit this time. Kaushik Das also on the show. Kaushik, how do you look at this situation and how would you assess the kind of data coming in the month of June? Of course, we'll have a clearer picture over the next couple of days. We'll see GST numbers and other indicators, which come with a bit of a lag. But overall, is it safe to say that we are seeing the regular sort of uptake when restrictions ease and some of that normalcy returning?
Hi, Tamanna. So let me give you a perspective. So we have a proprietary index where we, calculate the mobility and the very high frequency indicator, which we get on a weekly basis. So that index hit a peak of 83 in, sometime during the third week of March before the second wave started. So from 83, that came down to 33 in mid-May, which was almost the same levels as last year's May-June levels. But from there, we have gone up to 65 currently. So we have still some catch up to do to go up to that 83 levels, which we achieved in end March, which obviously will happen when all the states kind of open up properly. Now also there are some states which have put in restrictions and are opening it gradually. So probably by sometime in July, we should see the number going up to that 83 mark, which we achieved in in March. So sequentially, from the bottom or trough that we have seen in mid-May, when we had the toughest or the most amount of lockdown across the states, we are definitely better in June, and that we are seeing in the sequential improvement in different numbers, e-way bills and everything that we are getting in June. What is more comforting is that even the May numbers, we got a core infrastructure production number today for the month of May, and that was up about 17% year on year, coming on the back of minus 21% last year in May. So there was a positive base effect. But I think the kind of fear that people had about April, May, June quarter, the amount of sequential slowdown that people thought will happen in April, May, June due to the lockdown, I think the numbers will prove to be better than what consensus is expecting at this point of time. And then, as we discussed, the vaccinations have picked up. We are seeing, cases, daily cases falling below 50,000. Probably it will go even lower in the coming months. And then July, September, you should see the sequential recovery kind of having more traction as we go ahead. And, the fiscal measures have been announced, which will help on the margin. And what the government is trying to do at this stage is that they have a huge capital expenditure allocation that they have taken in the budget, 5.5 trillion, which is about 26. So they are trying to.
Kaushik, let me just ask you about June very quickly, just some detail there. So this data that you're tracking in the month of June and this proprietary index, are you seeing a difference in the first 2 weeks and the last 2 weeks? Because that is some, anecdotal, I wouldn't say evidence, but reports coming in that the initial burst is sort of tapering off towards the end of the month. Are you seeing that as well?
Yeah, Tamanna, that's a good point. So what happens is after the mid-May trough, the increase in the next few weeks will be at a sharper kind of slope and pace. And then it will start flatlining a bit and it will not increase at the same pace that you saw in the previous first half of June. So it's kind of, the slope has eased a bit. But I think over the next 1 month period, if the numbers keep on coming down, if the vaccination goes up, you'll slowly go to that 83 mark that we reached in March. And then the question would be, are we going to hit by the Delta plus variant or the third wave in September, October, and whether the trajectory will continue to show an upward move?
Yeah, no, that nobody knows. So we won't hazard a guess there, but just talking about data, and we're just talking about data today on vaccination front. The latest from the CoWIN site is showing me that we have vaccinated just 27 lakh people today. So keeping up that momentum is very, very key. We've done 86 lakh in one day. We cheered it 40, 50 lakhs the following days. We really can't afford to slump to 27 lakhs right now. We need to keep the momentum up. R.S Sodhi is with us on the show this evening. Mr. Sodhi, great to speak to you again. Give us a sense of what is going on. Are you seeing demand picking up? Are you seeing that recovery? What is your sense from rural India?
Well, Tamanna ji, as far as Amul is concerned, we are in milk and mainly the food products. So I don't say there is a recovery, there is continuous growth, but mainly we deal in three types of category product. One is the essential food category products like milk, butter, cheese, paneer, etc. Second is HoReCa segment, and third is out of home segment like ice cream or beverages. So coming to the last category, ice cream and beverages suffered last year also. This year it is 30-40% higher than the last year, same first quarter, but it's still 20% lower than the 2019 first quarter. But essential dairy products, milk, butter, cheese, ghee, last year also increased 10 to 15%. This year also increased. Coming back to the rural sector, let me tell you, in food, there are two segments. Rural is no doubt. One is lower segment, poor segment or lower middle class segment, which is urban sector, 20% in the urban demand and more than 70% in the rural demand. So that has also picking up, not like the last year, because a lot of migration has taken place to the rural area and those people were buying. This year, because people have come back, so that's now demand is coming from the tier 1, tier 3, and lately this month from the metro city like Bombay, Pune, Bangalore, also demand is growing, which was not growing for the last 1.5 years. But Tamannaji, one very important thing in food is, except dairy, there has been all food products price increases happened 10 to 12%. Dairy last 1.5 years, no price increase, but definitely tomorrow we are increasing just 4% price in the milk across India.
You know, you I think preempted correctly that I was going to ask you about it. It hit the headlines today that Amul is going to be increasing prices on milk by 2 rupees a litre. Give us a sense of the increase in input costs, Mr. Sodhi, and are we going to see increases across other categories like butter, cheese, ice cream, etc.?
You see, this last increase was happened in November, December 2019. There was a lot of pressure on our costing side because you see packaging cost increased by 35%. That is across all FMCG or durables, everything. Then logistic cost increased by 30%. In milk, logistic is a very major saving. And energy cost by 30%. So we had a lot of pressure on our costing, but we could not increase it earlier because of demand supply thing. Because we were getting more milk, the HoReCa segment, out of segment was closed. So we had to dispose of also all the milk. We were making commodities also. But this 4% increase is mainly because of increase in the cost. Plus we have to pass on some increase to the farmers also 80%. Reason is, you see, the farmers' food prices have increased. They are paying more for sugar, they are paying more for oil, they are paying for all the staples, they are paying more for everything, or even for diesel or petrol also. So naturally, their expenses increase, and this price increase, what you talk for the urban India, is actually increase in income of the rural India. So I can say through milk, 4% increase in income in the rural India, and Amul has increased, but so will all other brands will increase, because all others follow. Yeah, definitely, other products have to follow. Today, milk, we increase, but gradually we have to correct all the product pricing.
So do you see the increase in other product pricing also in the same range, about 4%?
Yeah, because everything has made out of milk only, so this milk prices increase by 4 to 5%, so each product category has to increase. But gradually will be increasing.
Okay. Mr. Joshi, let me get your sense of what we are seeing. Now, one point of view which is making the rounds is that in the month of May and April, in the middle of the second wave and the ferocity with which it came, livelihoods weren't hit as much because you didn't have this nationwide lockdown, but many lives were lost. And as a result, consumer sentiment has been hit. Do you think that revival of consumer sentiment is going to be the biggest challenge to any kind of recovery that we could hope to see?
Well, I think what you're saying is right in the sense that the second wave did bring the health ecosystem to the brink, but it did not hit economic activity as hard as the first wave did. I mean, that's visible in all the indicators. They didn't fall as much as they fell during April last year. And the recovery has also taken place, I think, since the lockdowns are getting lifted. Having said that, I think you're right that sentiment has been hit, but the sentiment can also revive. I mean, the main issue is that the household balance sheets are also stretched because of the health expenditures that they have incurred. So I think the reviving consumption demand will remain a challenge. I think going ahead, there is a little doubt about it. And unlike last year, I think from the demand side, as Mr. Sodhi was pointing out, the food inflation actually is much lower. I mean, except for a few commodities. In 2020, overall food inflation was high. So the terms of trade for farmers, I mean, had turned a little adverse because food inflation is low and non-food was rising. So this I think some increase in milk prices, and I think they will be supportive of mildly supportive of rural income. But overall, I think the consumption demand revival, according to me, will remain a challenge. And I think having said that, the services still continue to bear the brunt. I mean, they haven't been opened up to that extent because the issue is we need to vaccinate fast. Everybody agrees that. But till the time we achieve a threshold where we can be comfortable, I think it's a long way to go. And in between, how we manage the various variants that are making their presence felt, how do we manage the lockdowns? We are learning to live with the virus, so I don't expect lockdowns to be more stringent, even if there is another outbreak. But the point is, we are living in a zone of uncertainty till the time we are sufficiently vaccinated, and that needs to be kept in mind, and that itself keeps the sentiment low.
You know, vaccinations, of course, are key, but what about price rise across categories? Follow-up question for Mr. Joshi. Apart from, non-food inflation, so we know because of a host of factors, global commodity prices, etc., companies across product categories have had to increase prices from home appliances, consumer durables, your electronic items, your automobiles. Everything is seeing that impact by and by. So do you think that is also going to dampen appetite as far as consumers are concerned?
Yes, I think the increase in prices at a time when I think people's income have been hit, I think that is not good for consumption. So clearly it will reflect in, it will be adverse for consumption. And also I think from the company's perspective, not everybody is in a position to pass on the input costs. So those who are not able to do that, I think they will see their margins under pressure because of increasing raw material cost and inability to pass on. So I think it is going to have varied impact on the economy. And I think, as I said, compared to last year, the hit to the rural economy from the pricing angle will be higher this year. And consumption, I think, is definitely going to bear the brunt if the current trend in inflation continues going ahead. And so far, I think the indication is that it is continuing.
Yeah, a reprieve from inflation might not be there for some time. Mr. Thiagarajan, how do you strategize at this time? There's uncertainty in terms of whether there will be another bout of infections. Vaccinations are on, but we really need more supply to come in to really hit that stride consistently, and input costs are rising. Do you peg this festive season as a key one in this context, or are you more in a wait and watch mode? Mr. Thiagarajan, can you hear me? You're on mute, I think, sir. All right. We'll wait to figure that out. Sir, you need to unmute yourself, Mr. Thiagarajan.
I'm sorry, Tamanna. What I mentioned is that the vaccination drive is the key to the sentiment, and sentiments can overnight change. There is absolutely no doubt about it at all. I believe that these sentiments have the potential to change very fast, but not the other fundamentals. The inflation is a reality. Mr. Sodhi did mention that the cold chain and the deep freezers are also going up by 7 to 8% because of the commodity price increase. Now, the key is actually how do you get back the demand revival? But I'm thankful to the government. There are certain PLI schemes and these other schemes that are being announced, including the credit guarantee or the today for the power. All these will happen, and I'm hopeful that the festival season will be a great season for automobiles or home appliances, so on and so forth. Now, between now and the festival season, if there isn't a third wave, again, anybody's guess, but as Mr. Joshi mentioned, that we know how to cope with this. We have enough experience. Healthcare infrastructure is far better now. I don't think there is going to be an oxygen shortage or ventilation beds shortage. So therefore, I am optimistic that the growth will happen. I am betting on that 8.3% GDP estimate of RBI. It is definitely going to take place. So therefore, what I feel is that the revival may not be the same like last year in Q3 and Q4, but still we will manage growth. I think it will happen.
Okay, what are the factors, Kaushik Das, that we need to now look out for? We had a boosters of sorts announced by the finance minister earlier this week. We've discussed it in detail over here, where credit guarantee schemes have been extended. But do you think this is a time which warrants more measures to boost demand directly and some pressure easing off on the inflation front, maybe with fuel prices? Petrol is at 105 rupees today in Mumbai.
I was just coming to that, and to carry over your point, the first thing that the government can do is basically cut excise duty on petroleum products, and from both the center as well as the states. Because last year when oil fell to $30 to the barrel globally, the government increased the excise duty so as to get some revenues, because we were hit badly last year. So this time, oil prices have gone above 75 on Brent, and there are projections that it can go even higher towards $80 to the barrel in the second half of 2021. Now, the point is, as we discussed, the household's balance sheet is already stretched. People have been hit by health expenditure. So if you have a scenario where food prices are increasing, and it is inevitable because global food prices are increasing and oil prices are also increasing, which we don't have any control over, what we can possibly do is cut the excise duty on petroleum products because it has now gone above 75. If it was below 70, we could have still managed probably. But if you keep on passing it on directly to petrol and diesel, then on the other side, you'll have a problem on inflation going up and a second order impact of fuel prices feeding into food prices. And then that puts RBI in a very difficult position because RBI cannot continue to say that we don't care about inflation or inflation expectations, even as they support growth. So to some extent, the cut in excise duty is something which I'll be looking for from the government side. I think the government has announced a few measures which will help on the margin. But going forward, this will be something which we'll be looking for. And the earlier point that I was making when you asked me the second question is that the government has already built in a big amount of capital expenditure allocation, which is about 36 or 26% increase from last year on year. So the government is trying to fast forward that capital expenditure so that the quality of expenditure is also better and you don't have inflationary situation kind of building up over the long term. So I'll look forward to more capital expenditure in the coming months, as well as some cut in excise duty on petroleum products.
Meanwhile, going forward, I think another factor that we have to talk about is that monsoons are likely to be normal so far, and infections have not spread as badly as was feared in rural India before the start of the second wave. Remember, that was the big concern, that how are you going to control infections if they spread to that extent outside the urban centers? Mr. Sodhi, is rural India and demand from there, in your view, going to be the big shining hope this time around as well?
Because of good monsoon, good production of all the agriculture crops and the livestock. So, and then all Mr. Thiagarajan mentioned and others mentioned, the government is giving lot of incentives for the rural India. Today also announced right from power, internet and the fertilizer subsidy, and earlier also the free ration. So that is going to put extra money in the hands of the farmer to spend on other things. So we are positive, and this COVID is more or less controlled, and vaccination is also happening. I mean, Gujarat today I was reading, out of the 6 crore, 2.5 crore already have been vaccinated. So this, the third wave which we are expecting may not happen, and that is good for the whole economy, especially for rural, because then they'll get job, they'll get better money to spend on other things.
Absolutely, but we need to increase the pace of vaccinations. That's no doubt at all. I'm looking at the site right now, a little over 27, close to 28 lakh vaccinations done today through the day. In the middle of the week, not good enough. We need to increase that number, and that is the key. Thank you so much to all of you for joining us on this very important discussion as we track how the economy continues to recover and infection rates continue to stay down. No, we can't let our guard down yet. That is the key takeaway.